Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Since our last recording, interest rates have crept higher, the 2-10 yield spread continues to widen, and today we had a quadruple witching expiration Friday. What does that mean? Well, that's a term given when we have stock index futures, stock index options, stock options, and single stock futures all expiring on the same day. Historically, it sometimes adds some volatility to the day. Did it today? Let's take a look at the charts. If you're new to the channel, be sure to subscribe to get all the market updates before the next trading session opens. At the time of this recording, it is very late on Friday evening, so the futures market is not open. In the intro, I talked about quadruple witching and how it sometimes adds volatility to the day. Did it in today's trading day? Well, in the morning, yeah, there was some volatility early. But once we got into the afternoon, the market kind of stayed in a trading range until a small sell-off right into the close. And look what we finished with. A pretty well-formed classic doji sitting right at a point of major support. I mean, it's almost like you could picture somebody hanging on the edge of a cliff with their fingernails. That's what the market's doing right now. So what does this doji mean? If we look at the 10-day moving average, you can see it actually closed below the 10-day moving average today. So do we break back to the upside on Monday, or do our fingers give way and down we go, which could happen as well with the market? What's going to be the deciding factor on which direction we go? You guessed it, interest rates. So let's take a look at that 10-year note. You can see that we moved to the upside again. I actually used the word in the intro. Interest rates have crept higher. Don't know if you caught that, but in the last recording when I was showing the DMI and mentioning that the ADX was so high, it means that the strongest part of the move is likely over, but rates could still continue to creep up. Well, that's what they did. They've crept up just a little bit. And you can see it looks like it was a down day just because we had a lower high, but technically finished just a touch to the upside today on the 10-year. But then you can see after yesterday's close, there was a little separation from that 10-day moving average, and you know what that means. So a little bit of sideways movement. Still feel like the strongest part of the move is over, and we may get a little bit of a move back to the downside. I don't think there's anybody that doesn't think that we're going up to 2% at least on the 10-year. It's just when do we get there? If it's a rocket ship there, the equities market's not going to like that. Then we look at the 30-year, and you can see it actually did close lower on the day. There's that same look with the ADX sky high, well outside the positive directional indicator. You can note that we had the positive directional indicator actually moving to the downside, and same thing with the 10-year. ADX well outside that positive directional indicator, but it was moving down. The negatives moving up. That's occurring with the 30-year as well. So it does look like interest rates are going to stabilize a bit. That would yield a little bit of fuel, if you would, to a potential break back to the upside on the market early next week. Also mentioned in the intro that the 2-10 yield spread continues to widen. Do you remember when we first started looking at this? It's been a while, but it was way back in here when we were under 70 basis points. Now it's over a 0.6. So that's a big spread, and it's gone vertically. A lot of people are saying that if interest rates begin to level off a bit, it's going to be tough for financials. But remember, financials make money off of this, the 2-10 yield spread, because banks and institutions, financial institutions, they borrow on the short end, they lend on the long end. So as long as that spread is widening, they can still make money. So even if interest rates calm down and the spread stays wide, financials can do just fine. So I don't think it necessarily means that you need to give up your financial trades if you're in any, or financial stocks, etc. Looking at the dollar as well, the dollar has continued to stabilize following that zigzag. It had this real nice zigzag right to the 100% extension, and we've just been churning since then. We've tested the previous fib level now, so we came back to that 61.8% level, which means that by Elliott Wave Fibonacci rules, we could then move up to an extended C wave at 161.8. But for now, the dollar seems content just to go through and consolidate that recent move higher. Obviously, rates moving to the upside is supportive of a higher dollar. Bitcoin continues to do pretty much what you would expect it to do. It also had a nice zigzag hitting right at that 61.8% level, backing up, also testing its previous fib level, meaning that it could run to that next level, that 71,000 plus level that we talked about in the last recording. So I don't see anything with Bitcoin that's changing that scenario. The ADX continues to move to the upside. If there was one thing that you wanted, if you were long Bitcoin, you would like to see this positive directional indicator get on top of that ADX and have that rising between the two directional indicators. But other than that, Bitcoin looks pretty good to continue its upward momentum. Looking at the VIX, well, it teased us, right? Here's where we were in the last recording. This is what we were looking at. Said, is this the time? Is this finally the time when we're going to break and come and fill this gap? Well, the answer is no. And we look at the 10-day moving average, and it just goes to show that the rule I talk about all the time, no security in any time frame gets very far away from its 10-day moving average. Watch what happened. So here's since the last recording. Boom, 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 right back up. So testing that 10-day moving average and actually testing the 50-day, that royal blue line is the 50-day, which it hit on the high. So didn't get down there and close the gap this time. Are we rebounding back in the VIX? That wouldn't be positive for the market, but if we do rebound higher at the beginning of the week, then we could see the VIX finally go down and fill that gap. Hope you've had a great week. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.